Are you new to investing and wondering where to put your money? Welcome to our guide, Stocks versus Mutual Funds. Many beginners are scared of losing money, and that's completely normal. The financial world can seem confusing and intimidating. We are here to help demystify the process and offer a clear, simple path to starting your investing journey safely. Let's start by looking at the core differences between buying individual stocks and investing in mutual funds. Understanding the basics of what you're actually buying is the first and most crucial step. When you buy a stock, you are buying a tiny ownership slice of one specific company, like Apple or Amazon. Your fortunes are tied directly to that one company's performance. A mutual fund, however, is a basket. It pools money from many investors to buy dozens or hundreds of different stocks and bonds simultaneously. Now let's talk about the big factor that worries beginners: risk and volatility. Individual stocks carry high volatility. If that one company hits a bad patch, your investment can plummet quickly. Mutual funds offer built-in safety through diversification. If one stock in the basket fails, the dozens of others buffer the impact, leading to smoother returns over time. The amount of work you have to put in is another major difference between the two approaches. Individual stock picking requires significant, active research. You need to constantly monitor company news, earnings reports, and market movements to be successful. Mutual funds, especially broad market index funds, are set it and forget it. You invest regularly, and professional managers or algorithms handle the diversification for you. So which option is truly better for a first-time investor who is cautious about risk? For beginners, mutual funds are generally the clear winner. They offer instant diversification, lower volatility, and a minimal time commitment. You can start small, and the power of compound growth will work for you over many years, providing safer, steady progress toward your future goals. Don't let the fear of investing hold you back any longer. Start simply and start safely. Focus on consistent contributions to a diversified mutual fund, and leave the stress of picking individual stocks for another day. Your financial future is waiting. Take that first step today and secure a better tomorrow.